Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract on Friday, August the 20th, 2010. Bit of a late session video today, but I wanted to go ahead and get something out for you folks, particularly on the those who are interested in the free market timing that we offer in our videos that aren't particularly subscribers. Look at that beautiful equity curve right there. That's our Evo. That's our venerable Evo, showing you what she can do. Beautiful, certainly part of the MSA UDT, which we're actually going to look at in a second. But we're looking at right here. That trades the TF contract, the Mini Russell. This is the Mini S&P 500 futures contract. Looking at the last print of 1069.50, as the market just simply gave it up on trying to not only break above the aforementioned resistance level, but certainly now the 1100 level in terms of horizontal technical significance, and really just gave it up. We'll look at in a second how it did so, but certainly the bears remain in control. We jumped out of our bearish exposure for about a 60-point gain or so in the S&P cash index. Certainly 60 points in the Mini S&P 500 futures as well. $3,000 per contract, up about 60%. That was on a course about 3 months or so. But looking at the last print of 1070, this of course is the conclusion of Friday's session. As we see here, kind of a mixed day. Bears are in control. Bulls again on another errant move. The Bulls just simply won't learn. The Bulls try and blast this market higher, and the Bears certainly take control. They must not be watching the videos, the Bulls, of the MiniAnalyst.com, because the Bulls just repeatedly try and rally the market, and it's just not working out for them. Here we had this gap lower. Had a couple of day rally, but just simply once we got up here to the 630 level, 635 in the Russell, it just wasn't to be. Blasted higher, huge sell-off, blasted higher, huge sell-off. Finally, the Bulls gave up, and we had a continuation move on this early session, and didn't really particularly get the move back to the upside that the Bulls had been waging in terms of their war on the Bears. But nevertheless, that is the market dynamics. Again, this is an errant setup, although we are seeing some positive divergences, which kind of kept us from going short today on a discretionary basis. As you can see, this is full all-out bearishness. All this red is full all-out bearishness, suggesting the market was going to continue lower today, which it did on this AM session. But we're looking at our intraday dynamics. These are proprietary indicators. We're seeing positive divergences on this sell-off early in the session. Really didn't expect any follow-through. Didn't, however, expect them, the Bulls that is, to certainly reclaim, which they haven't really, but certainly test in an impressive fashion, break above the trend in the early session highs. But that's where the Bulls stand. But again, of course, they have given up quite a bit. We are neutral, but certainly would be erring on the side of the Bears, given we're actually looking for a chart of the daily market. There's our beautiful swing system 5.0. As we mentioned, trades the Dow. Just a beautiful trade setup. Look at that long, short, long, short. Gave up quite a bit of money there, profit there, but right back into another money-making trade, right back into another money-making trade, and now right back in another money-making trade. We'll call it 10.325 down to 10.201. So coming back a little bit, but still up about 150 points or so, has been the most recent trade in the venerable swing system 5.0. But we're actually, excuse me, there we go. Looking for a chart of the S&P 500 market, the cash index, a daily chart of the market. This is our official market timing, as you can see right here at the aforementioned $3,000 gain. We jumped out of our bearish exposure right here, but we just weren't willing to go to the bullish side. The Bulls continue to rally it higher, but look at this. Look at that swing point in confluence with the fib retracement. And it was just too much resistance to be able to go to the long side. The Bulls tried to get her up, but once we got this hybrid ET sell signal, the follow-through, it was all bears. We didn't jump back on the bear side because we kind of want to wait and see how this channel that we're getting from 1040 to 1140 to 1120 resolves itself. Now, this could be a beautiful inverted head and shoulders formation. As you can see right here, this is the head, this is the left shoulder, this is the right shoulder. Should we hold 1060, it'll be all bulls, but we're just going to sit on the sidelines now as everyone else gets chopped up and kind of wait for the blast higher before moving back to official exposure one way or the other. On the bears side, we are going into the fall, just a few more days of summer. We're going to get a sell-off in all likelihood. Probably would see the 1,000, maybe even 950 level before we would see 1150. But, we'll just let the market be the final arbiter in that case. But right now, remaining officially neutral as we wax and wane within this channel from, we'll call it 1060 to 1120. So a breakout of that range will certainly merit attention from a price technical perspective. But nevertheless, short-term momentum is in the bears camp. Short-term direction is in the bears camp. Short-term trend is in the bears camp. The bears remain in control, so definitely want to be selling the market, as it were. In fact, we were looking right here. Day-ahead indicator suggested that certainly this negative divergence here suggested you definitely wanted to be selling. The bulls suggest you wanted to be buying right here, so buy this sell-off, and that worked out beautifully, but certainly in divergence didn't quite make it. So once we had the sell-off, the bears certainly were in control and remain in control, suggesting no buying of the market for today's session. But again, look at this beautiful trend higher. So it's a bit of an errant move. The bulls as the go to cover into the weekend, but nevertheless, that's pretty much the market, as it were. And there's, of course, the aforementioned Evo, kind of staying away from things. Beautiful. Again, the MSA UDT was essentially going through all of our systems and really picking the cream of the crop, the lucky 7 systems in the market, and they continue to outperform. We're going to look at that in a second. Continue to outperform. As you can see, look at the Evo just blasting to new equity highs on average, gaining, we'll see right here, $134 every time the portfolio takes a profit, or sorry, every time the system trades, $134 in average trade net profit, and that of course is including I believe $20 for slippage and commissions. Our reports on the website are $26, but I believe here they are $20 included, factored in for slippage and commission. So, how have our portfolios been doing? Well, we've had a bit of a drawdown. As you can see, we kind of went through and took a snapshot of the, let's take the MAP DT, for instance, ran from $20,000 to $60,000. This was, actually the date should be right around here, June 29th or so. This was June 29th. And so over the last couple of months or so, 6 weeks, went from 20,000 to 60,000 and since retraced down to around 45,000. So a beautiful opportunity to get involved with this portfolio as it's streaming to the new equity highs. It's certainly okay to get involved, but once we've started basing out, you really kind of want to wait for a pullback in general, generally speaking. However, there's a MAPDT version 4.0 HR, went from 25,000 to about 55,000, 53,000 or so. Little bit of a shallow pullback, but the most resilient, there's a MAP Black, the most diversified and representative of most of our systems, trading systems. Again, moderately shallow pullback, 100,000 a month and a half ago, up to 200 and so thousand right now, down about a 20% drawdown or so. But look at the MSA UDT. Plotted that baby, 10,000 up to 25,000. This is now the leader, and this is why we picked the best performing systems that we had going. You see a beautiful, this actually was lagging behind in terms of percentage gains, as you know, behind the MAPT, but look at the risk, the wild swings that you get, the standard deviation, as it were. But the MSA UDT is now at the forefront with 149% gain over the last 32 days. So it's really been able to hold on to its profits a lot better than, say, the MAPDT, which now stands a measly 125%, coming off of us, I believe, a 200% gain. Definitely impressive, but holding on to its gains has been the MSA UDT model. There you see it's breaking out as of yesterday to trying to break out to new highs. If you guys have any questions about subscribing to this portfolio or any other of our portfolios, beautiful time to take advantage of lower prices in the equity curves or breaking out to new highs in the relative outperformers. Go to the website, chat with the support team live, or if you have any questions, shoot us an email to admin@MiniAnalyst.com. Hope you enjoyed the video, and we'll see you next week.